Today we are joined by Khalfan Abdallah. Good afternoon, Head of Product Development and Sharia Compliance at Gulf African Bank. Thank you very much for joining us this afternoon. Does Islamic financing have something to offer for non-Muslims?
Thank you very much, Sarah, for having me to this show. Definitely, Islamic finance has a lot to offer to non-Muslims. Actually, globally, and if you look at non-Muslim markets where Islamic finance operates, you'll find that 1 in every 3 customers is a non-Muslims. And in worst case scenario, you find 1 out of 8 customer is a non-Muslim. So there is a lot of services that can be offered. Let me mention a few of them. One is prohibition of interest, no interest on financing and even on their saving or investment products. So if you come to an Islamic financial institution, say a bank, and open a saving account or a time deposit account, you will have a share of return on what they are generating in terms of profit on investment side. And if you come for financing, again, they will not charge you interest, but they will trade with you or do a lease transaction with you or do a partnership transaction with you, which again, they are devoid of interest. And one thing to mention here is no compounding, no compounded interest. You know, the conventional banking sector thrives with the compounding interest. Islamic finance, there is no interest, and of course, either simple or compounded. None of these features in their savings product as well as in the financing product. That is one side of it. Another element is ethical investing. Islamic finance inherently ethical, sustainable, environmental friendly, and socially responsible. So Islamic financial institutions, they invest in those sectors which are socially ethical. Like we have right now a controversial discussion on betting, for example, betting sector. Islamic finance doesn't deal with that sector, either by financing or doing other transactions with that sector.
All right, and I'm glad you mentioned the interest. It's prohibited to give out interest. So how does one save, and also how do they ensure they get like profit? Or just simply break it down for us. How does Islamic financing work?
Well, Islamic finance is very broad. It comprises actually banks, Islamic banks. It comprises Islamic takaful, or Islamic insurance or takaful. It also comprises capital markets, the products of like bonds. To use an example on Islamic banking, the way it works is Islamic financial institutions, as you rightly mentioned, are there to Sharia principles when it comes to their transactions. So if you come and open a saving account for purpose of investment, the contract you sign is an investment of, investment in nature, of which you will be entitled for a share of profit that the bank is going to make out of investment that it is going to make from that money which you give. So the nature of this transaction is investment. While in conventional, the nature of that contract is normally a loan. It's like you have given a loan to the bank, and bank promises a certain fixed rate of return to your deposit and give it to you. But on Islamic banking, you are opening an account, you are investing, and agree to take a share of profit on what the bank is going to generate out of your deposit. So that is one of the difference. On the financing side, again, if a customer goes for loans in conventional bank, you are given a certain rate, okay, of which you will be charged out of the money that you are given. Islamic finance don't give loans, don't give money. They trade with you. So they will buy something which you need, because you need money for something. You don't just need money to have a look at it. You need money because you need to buy this or pay for these bills and so on. So Islamic banks, what they will do, they will buy something which you need and add a profit which is agreed between the two of you and sell that commodity to you. Or they will enter into partnership with you, okay, say in a mortgage finance, you will contribute a certain amount towards acquisition of a house, and the Islamic bank will also contribute a portion and leases that house to you, of which you will be paying a certain profit because you are occupying a house which is jointly owned by you, of course, and the bank. So that is in short how Islamic banks operate. But of course, there is takaful, which I said, which operates in mutual cooperations, compared to conventional insurance, which is a commercial contract whereby you go buy a policy and your money is gone. If the event of loss occurs or misfortune occurs, you get paid or not. On takaful is a bit different. You participate. You become, there is a pool of participants who comes together to insure against a certain loss. And if there is a loss, you get paid out of that pool of fund. And if there is no loss, this fund still belongs to the participants, to the policy holders, and it doesn't belong to the insurer. If you compare with the conventional, everything goes to the insurer. You transfer the risk to the insurer. While in Islamic takaful, actually you cooperate to and share that risk among the participants.
All right. Now you've mentioned takaful, and I'm glad you mentioned it, but the uptake of insurance in general in the country is low. It stands at 3%. And also in takaful, it's quite low. So what have you done to ensure that you ensure that the penetration of people who are taking it up are high?
Well, as you correctly mentioned, the insurance sector penetration is still at low, but with the coming of takaful as an alternative provider of insurance products, definitely it has increased the uptake of insurance product in general, and several studies which have been done confirm to that. Now, there are several initiatives that have been taken by insurance industry players, the likes of organizing seminars and conferences. Here in Kenya, we are glad to have almost in every year 2 to 3 conferences on Islamic finance. And among the things that features in is Islamic insurance or takaful, to create awareness, to spread the message, and also show the benefits that participants can enjoy, or the customers or policyholder can enjoy by uptaking takaful products.
All right. And also on the matter still on interest rate, the fact that it's prohibited, how do these Islamic banking make money if they do not take interest, meaning they rely only on profits? So how does it work? Or is it safe to say that you just remove the word profits and it's you remove the word interest and you substitute it with profits?
I'm glad that you have mentioned that is one of the areas that normally confuses a lot of people, including Muslims. You know, interest from the Islamic point of view is an income, is an additional benefit that the creditor gets from a loan transaction. So if I give you money and I ask you to pay me something on top of that, that is interest. But if I buy something, something and sell it to you, okay, at an extra amount. Of course, there is an extra amount, but this is not an interest. This is a profit because there is a commodity here. Money has changed the form into a commodity, of which this commodity is very beneficial by itself to derive a profit on it. So Islamic banks normally does that. They buy things, they trade, they lease, which is again, there will be an asset there, which is leased to you as a customer, and you pay rental, which is again a form of profit to the bank. So that is the difference between interest and profit, and of which we are insisting to say that Islamic financial institutions, they are charging, or they are operating on profit-based, not interest-based.
And also, Khalfan, if you can tell me about ease of doing business in Gulf Bank, how has it been for you this year?
Well, alhamdulillah, we are not doing that bad. Of course, every industry has its own challenges. Like we have heard from the trader in Eldoret, they had the climate challenges. But again, in our industry, we also have some of the unique challenges, like defaults or delaying in making credit payment obligations from our customers. But generally, we have been doing well compared to our peers or other banks which are in our tier.
All right. Yeah. And also, if you could probably highlight for us, what are the benefits, the key benefits of using Islamic finance?
Well, the key benefits of using Islamic finance, is, as we mentioned earlier, no interest. Number 2, we mentioned as well, is ethical investing. Okay, all investment that will be made out of the money that, that is deposited by customers is going to be invested on ethical and social responsible investments. And number 3 is fairness. You know, Islamic finance is all based on fairness in transactional contracts, that I should benefit and you as a customer should benefit. So that is the underlying principle. If a customer is treated in any way, and if he finds that there is no fairness in any of these contracts, again, Islamic finance has a robust governance structure which involves Sharia scholars, which can be reached upon. Sharia scholars of that particular bank, they can be reached upon, and that grievances be aired to them, and they will have the mandate to investigate it by themselves or appoint somebody to investigate and ensure fairness is achieved and attained for this particular customer.
Okay, I'm glad you mentioned fairness. For instance, the mortgages. Yes, you give out a house on a mortgage, and then a person is not able to finish the payment. What do you do?
Well, there are various scenarios. Could be you fail to finish a payment because maybe you have lost your job, or maybe you don't want to make your payment. So the situation will differ. I mean, how we will handle you will be different depending on your situation. So if maybe you have lost a job for whatever reason, then of course we can still come down and agree how to go about that transaction. Mind you, in most of mortgage finance, it is based on partnership. So we own a share, and you own a share in that particular house. This house is ours. What maybe you are struggling, it will be on our side, is buying our shares and paying the rent or the profit for you fully enjoying the benefit of that house. So that is something that we can discuss, looking at your situation. What are you planning to do for the whatever difficulties that you are in, and be able to see if we can extend the tenor for this particular facility, or if we can do an exit, which is honorable exit, by way of going to sell this house, or even before going to sell the house, you are given an option to find a buyer of that particular house, you as a customer. And if you fail to get the buyer within a defined timeline, then that is where we can now appoint some auctioneers and sell it. And again, the proceed of the auction will be shared according to how much shares you own and how much shares the bank owns. So this is one way of handling it. But again, mind you, all these procedures is guided by regulatory legislation or regulatory policies which are available. Yeah. So
there is no point in which you can take away the house?
The house, that's the extreme case. Mind you, in banking, the monies are not of the banks. The monies are of you and so many others who are coming to deposit. So while you might be very keen to look at, this guy will lose the house, but mind you, there are millions or maybe thousands of customers who have provided that money as an investment to be able to buy you a house. So what about these guys? So this is where now the central bank comes in and says that no, you have to protect this depositors' investment. You don't just let one customers enjoy and then these other small number of depositors suffer. So definitely, if there is no way out, there is no way out, and that is the security that is there. As I said, legal procedure will take its course, and if an auction is done, you will get your share according to what you owned in that house, and also the bank will retain what it owns. And the good thing here in this is profit and loss sharing. We might have invested a lot of money in that particular house and fail to get a good price in the market. If we proceed to sell, we'll also take a loss. Okay, this is different with the conventional banking. Conventional banking, if we fail to get a good price there, yes, we will sell it, take everything, and again come after you. In our case, if situation happens, what we have invested is more than what we were able to get at the market price, and after splitting, after giving you a share and our share, we can no longer come to you. So this is the beauty of Islamic mortgages, where there is a profit and loss sharing.